Alrighty, and is the chat gonna load? Not awesome. There it goes. There we go. Already got a poll going. And well, that's the thing. You got to make a choice, red or green. That's the whole fun of it. There's no third choice, red or green. Yes or no? Is it gonna be green? Is it gonna be red? No idea. You just you're not a trader. Alrighty. Gotta be convicted to a decision. Welcome, Dawn, Kevin, Craig, Swinburne, David, Dan, Serge, Diane, Scott, Terry, Hugh, David. Good to see you, David. How's Lorraine doing? Good. Congratulations to her. Andrew, Mary, Kimberly in the house. My favorite subscriber of all. Kimberly, good to see you as always. And Logan, Jim, Rob, Cliff, Aaron, B, Ted, Sledge in the house today. Ed, Chris, how you doing? You've been kind of like AWOL mostly lately. I've seen you a few times recently, but you must be a busy lady. Anyway, the Army is deploying micro nuclear reactors. Now, I've talked about SMRs and how that's where like Oklo and you know nuke what is it new scale SMR, they're deploying these small modular reactors. And that's been all the rage. But if you've heard me talk in the background, I've been talking about how micro nuclear reactors are really probably the solution to a lot of problems. And these are shipping container sized units that you can just take and deploy wherever you need power, whether it be a substation. I mean, think about that. You could deploy these at substations, and there's no maintenance, there's no water hookup. Most of them run off of what's called a Stirling engine, which is just air cooled, uses the heat from the nuclear process. You run them for years. When they get low on fuel, you just ship them back to the factory, and no big deal. It's kind of interesting, right? Kind of interesting. And the Army is set to deploy these at bases around the world. So, I've got a fascinating story of compromise and innovation about when the power goes out, total darkness. Now, this first thought on it wasn't, when the power goes out, the ice cream's going to melt. Maybe that was my first thought. But anyway, when the power goes out, societal collapse, right? Ironically, this is joked about on the internet, but we're only like 9 meals away from total chaos. If the grid breaks and we can't put the power back on, what happens? So, it could be as easy as a squirrel that decides to play Russian roulette with a transformer. But this all gets me thinking about how the absolute paper-thin fragility of our power grid is. I mean, we live in the 21st century, and things are getting worse. I mean, look at the power outage they had in Europe, just based on a little solar hiccup. With self-driving cars, electric cars, AI, they can write poetry. Our electrical infrastructure is basically a series of tin cans and strings, almost literally. Strings are wires held together with a little bit of duct tape and prayers, and every tech company on the planet is now ramping up some power-hungry AI. I mean, it's kind of wild. Now, Goldman Sachs, a group of people who know a thing or two about making money from chaos, has been basically standing on the rooftop, banging pans, yelling about it, that they're predicting that by 2030, data centers alone will be sucking down enough power that would be the equivalent of 75 million homes. That's almost like a third of the United States homes. Our grid, which is designed to it was designed when the most advanced piece of tech in your house was a microwave. Think about this. Back in the early days, when a microwave was a hot technology thing, a lot of our grid was deployed back then. The design and the technology that runs it every day, and it's expensive to upgrade. And we're just not ready for this. I've talked about this with people. I'm like, they're like, oh, we've got a charging station for Teslas in our little town, and it's fine. But what if all the cars are EVs? What if all the data centers, our AI overlords suck down as much power as all of the cars, and all the cars are EVs? Love it or not, we're headed this way. All right. We're talking about a future where rolling blackouts, price spikes, and your smart fridge going dumb in the most inconvenient time while your ice cream melts, It's a potential problem. But fear not, because Uncle Sam has a plan. And like most of their plans, it can be terrifying but brilliant all at the same time. The U.S. Army was announcing something called the Janus program. Sounds like a villain's plan from a James Bond movie, but really, this is a real thing. Really real. They're going to power their bases with micro nuclear reactors and provide resilience against grid failure. That's right. These tiny portable shipping container sized nuclear reactors that I started talking about, because when you power a grid as reliable as a politician's promise, power grid, maybe it gets as reliable as a politician. Like, that's the scary thing here. That's why years ago I started down my own route of building solar power and batteries that I can rely on. Kind of saw this coming years ago. So when you got enough money and resources, why not bring your own personal sun to the party, right? The plan is to have the first base deployed and running by 2028, with private companies owning and operating these little bundles of atomic joy. The Army gets 24/7 power, safe from cyber attacks, safe from grid failures, safe from weather disasters, safe from presumably suicidal squirrels. We've all seen that transformer blow up, right? And a few savvy investors who are smart about how this might play, well, just might catch a bid. Might make a difference in your account. This is where things get kind of interesting. The government isn't just building these things themselves, they're outsourcing. Classic picks and shovels type play, but instead of selling shovels to gold miners, we're talking about selling nuclear reactors to the military. It's almost guaranteed money. The contracts for the first 9 bases are going to be awarded in 2026. This is a starting gun for a new arms race, an energy arms race, a reliable energy arms race. So who are the players? In a private pre-IPO world, you've got companies that sound like they were named by Dungeons and Dragons fans, actually. Probably the nerds got out the naming book here. We got Valor, VALAR Atomics, founded by a high school dropout turned nuclear visionary who just raised $19 million and is already breaking ground on his test reactor in Utah. Then there's Radiant Nuclear, which has raised a whopping $250 million, so basically $250 million, from big names like Anderson Horowitz and Peter Thiel. They're building a portable 1 megawatt reactor called, I'm not sure how to say that, Kaleidos? I'm sure somebody will tell me how to pronounce it later. That's usually what happens. And they're building a factory, and they plan to be rolling these off the assembly line as soon as 2028. Sounds like a real competitor there. Now, for those of us that don't have venture capital connections in our back pocket, there's some publicly traded companies trying to get in on this. The most obvious, NuScale Power, the one I mentioned earlier, SMR is the ticker. They're the only real pure play small modular reactor company on the market right now. You could say, oh, what about Oklo? What about SMR? The only real pure play on the market right now. The day the Army announced the Janus program, their stock was up 16%. Now, to be clear, NuScale, like most of these companies, hasn't actually deployed a commercial reactor, and they don't have a micro nuclear reactor ready to go. They have a grand total of $8 million in revenue, so welcome to a speculative play. But when you look at the whole picture, they're actually the furthest along in the regulatory process. And we know the NRC, the Nuclear Regulatory Commission, is kind of the holdup for a lot of these projects. But this rabbit hole goes even deeper. You can have a nuclear reactor without, you can't just, you can build a nuclear reactor, but how do you run it? It's got to have fuel, right? And this is where the crux of the issue has been. Russia has been the sole source of nuclear fuel for a long time. The US just kind of got out of the business years ago. And that brings us back to companies and investment opportunities that are trying to start up nuclear fuel production in the United States, like Centrus Energy, their ticker LEU, and BWX Technologies, BWXT is their ticker. These are the guys who make enriched uranium, or they're trying to, in fuel assemblies. BWXT already has about at least one $1.5 billion contract with the government to supply fuel for naval reactors. Think about that. You don't ever hear about a problem with a Navy sub, but they've been running nuclear reactors that last 30, sometimes 50 years out there cruising the seas. We don't ever hear about any problems with those. So this is a real possible potential solution. As the demand for these new microreactors starts growing potentially exponentially, the demand for their fuel, it's going to grow right along with it. This might be one of the ultimate picks and shovels plays in this sector right here. These two companies and any other, like, of course, you have uranium miners themselves, like Cameco, CCJ. If you believe in a nuclear future and you think this is the real solution that for the next 20, 30 years, you have to believe in the stuff that makes it all work. If you want to spread your bets, there's even an ETF that you could take advantage of. VanEck Uranium and Nuclear ETF. The ticker is NLR. And it holds a basket of all these companies. Now, for your dose of reality here, this is not a get-rich-quick scheme. This is a get-rich kind of slow if you don't lose all your money and oopsie, we went out of business first type of scheme. These are high risk, high reward type things. The technology, it's kind of new. We don't have a bunch of micro nuclear reactors deployed to prove. The regulations, generally a nightmare. The timelines, they're long. Some of these companies like Oklo and Nano Nuclear have a zero revenue, and their stock price is pretty much all hype and speculation. Vaporware, up on vaporware. Remember, you're investing in a story and a dream of nuclear-powered future, but when we get the government involved, I don't know. But the military putting their weight behind it, maybe that looks more like a plan. So if you're sitting there in the dark during the next power outage, maybe with the flashlight looking at the transformer, looking for a squirrel that trying to make a nest in the transformer, just remember the Army is building a fleet of pocket-sized nuclear reactors, while the rest of us, we're just trying to figure out how to survive in an unsteady grid type of world where AI gets all the power. Do your own research, of course, but I thought I'd point this out, that this might be kind of the next big thing in nuclear that's not really being talked about as much. So There's the opportunity. All right. I'll keep talking about it as we develop more and more technology in this sector. The micronuclear reactor stuff absolute fascinates me. You can, if Goose is here, he'll be a testament. I've been talking about this to him for 3 years. Westinghouse is another play. They actually have one that, an operational prototype. They don't have it licensed here, but they actually have an operational prototype. It's on the hush hush. So you don't think about Westinghouse, but Westinghouse makes all the nuclear reactors for the subs. At least they're one of the major contractors. So yeah, I want one too. Like, shoot, man, power everything, right? You just sit there and let it run. Anyway, all training involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just I predict things. Maybe they come true, maybe they don't. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. I might have talked about it during one of the TTL. I don't remember. The conversations are so varied when we do the in-person events. I might have mentioned the micronuclear reactors during one of those events. Anyway, so if you trade stocks, options, bonds, forex, futures, cryptos, treasuries, you might lose money when you trade them. Be careful. Just a dude with a show on YouTube. Occasionally I get stuff right. I mean, I have no crystal ball. I got a bag of unicorn dust. It's let's see if it works. So looking at the week so far, guess we're not getting the CPI stuff today because government's still shut down, baby. Government's still shut down. Looks like 60% think Bitcoin's going higher today. 40% no. Let's start another poll. See how y'all feel today. Does the How about this one? Does the government reopen before the FOMC meeting on the 29th? Yes or no? Yes or no? We're up to 40 days on Kashi. It's not looking good. So we got on Polymarket. Oh, look at that. Hey, this is looking like we might stay shut down for a while. It's Polymarket versus Kalshi. These are the two big event betting sites I know of right now. Should be interesting. So in case you didn't know, maybe nobody, maybe you're not acutely aware of these things. Wednesday, October 29th is the next FOMC meeting right here. And remember, they're not part of the government, technically. So they're still open and running and operating. Now, an interesting, yesterday morning, they had a sudden spike in their lending facility. It was like a $6 billion shortage that a bank had, and they had to tap liquidity yesterday morning. That was the biggest short-term lending hiccup since COVID. that didn't involve end of the quarter window dressing. It's the biggest. Everything's fine. Hiccup. Some bank, some bank out there needed $6.5 billion to stay solvent. Yesterday. That's interesting. It's a crack. That's an indication that global liquidity is freezing up, or at least bank liquidity. That's the kind of stuff that blew out Lehman Brothers, that blew out Enron, that caused the great financial crisis. Just out of the blue, shortage. So that's it's a problem. It's a problem. We'll see. USAA's they've got $850 or $830 million, or I think it was 800. No, $230 million. $230 million of loans that they've already issued to government workers. USAA Bank. So they're trying to help everybody stay solvent. ES overnight. Let's check it out. So we came up. That was concerning right there. We came up right to the line and pulled back again. And what scares me maybe the most, that happened in 3 waves. That's not good. That right there, that move yesterday was a warning sign. I might need to buy protection early here. So this move right here, this is what we're interested in. This move right here, right now. That high, this low. I've got lots of other stuff on there. Now, that little pause. But this move almost, makes it okay. This is uncertainty. All right. We dive in a little deeper, a little closer. That was a big reaction. This is 3 waves. So this one over here, 3 waves. This one over here, 3 waves. We're going higher in 3-wave moves. That's a warning sign. There's something not right in the price action. This is not the kind of stuff that takes us to new highs. This move right here and this move right here, this is not the kind of stuff that sets us up for going higher. This is the kind of stuff that sets us up for another one of these, but possibly bigger. Yeah, this one was 2 to 3, about 3% roughly on a Friday. This one could be 5 to 10% in a day or 3. That's what we're sitting here looking at. The warning sign in, looking at this, digesting this from back here on Friday, all of big tech all got hit. Like there was no real safe haven. Usually, so far in pullbacks we've seen, big tech, some of it gets hit harder than others, and but it all went down pretty coordinated. So what does that mean? That means the warning signs are there that smart money is getting out. They're taking the exits. It may not look like it sitting here right under the all-time high, but that's what the warning signs are before we have a bigger flush out. So right now we're sitting here under this resistance. We could come on up here even, but looks like we're cooking a bigger flush out. Now, narrative, control, whatever, why? You can think about it like the market's frothy. We need some sort of big pullback. Maybe we use the government shutdown and Jerome Powell as the excuse to kind of flush out the market a little bit. In the meantime, in between time, fix everything in next year and rally strong into the midterm elections so everything's rosy. Right? I mean, if the market's going up, everybody's real happy. And typically when the market's doing really good, the people running the economy get elected or reelected. Think about it that way. Anyway, if you believe in that kind of clandestine destiny. Anyway, manifest destiny. NQ also not looking very strong. These are warning. This price action's warning me that might be time to reload my UVIX. This didn't really give it back up. So what am I looking at? Go look over here. Got to log back into the platform. It just logged me out. Awesome. Let's go. Take a look, see at what we can find. Whew. Pricey. So last, back in, what was that? August? No, September. Back in September, kind of coming into October, the Octobers, especially the 14s, were very reasonable. There seems to be some sort of chaos priced in on November. And I'm not sure what it is. And it's skewed to the call side. Look, the put side, there's no premium. Call side, juiced up. Looking at, they're pricing a $4 move. 1, 2, 3, basically going up to 4, right below 14. It's banging it just under 12, so we'd be banging it just under 16. If you never knew how to do this, how to figure out the market maker priced in move, sell both sides at the money. You can do it. You can do it slightly in the money, one in the money, or one out of the money. Pretty close. Showing there's skew to the upside, which means the market is pricing in upside risk on UVXY. Now we could go to VIX itself and be like, well, is this more affordable? Look out here. And they're pricing out a $5 move here. Now, funny enough, UVIX moves 2x whatever VIX moves. So if VIX gets a $5 move higher, percent-wise, that's 25%. So percent-wise, that's UVIX going up 50%. 50% higher, be a $6 move. So the opportunity here is actually bigger because they're only pricing in a $4 move, but the $6 move would match what's being priced into VIX. It's kind of interesting. So one, roughly 4, 5, 6, it'd be up to 18. So you wouldn't really want to buy anything like take 18, a buck off, that would be break even at 18. That right there would basically be a break even at 18. That right there would be a double at 18. So your real opportunity starts coming in right here. Now, one thing you could do is some sort of call spread where you buy a lower price call and sell a higher price call, but that does limit your potential upside, but it also decreases your exposure. 68 cents risk for a potential $6 upside if we were above 20 around Thanksgiving in the United States. Interesting. Interesting. I have to think about how I'm going to play that. All right, let's end the poll. See how we did. 56 votes. It looks like 2/3 think the government's going to stay shut down. Let's do another poll. And this was just a fun one. Do you want a micronuclear reactor? And Russell. We're going for 26. So this is, that's the, set your alert up here. When we get there, that might be it. I'm pretty sure, like when we broke above, way back here, I said, hey, now that we've broken above, this was back in August, this is now the target right up here, 2,600. That may be where we're taking it. RSP. And I've talked about this maybe a target too, 194. We can jam this baby up here and get Russell up. That might mark a top in the market. And CL. Yeah, we're going to flush this down. We're going to push this down. We're going to push this down. Still set to drop. GC going parabolic. Did we make money off that yet? I don't think. I bet we didn't cash out yet. And we're getting close. So crazy. Almost 20%. It's now it's 22%, 20%, 17%. It's bouncing all over the place. A couple pennies makes a big difference right there. It's the gold rush play. Let's see if this thing's starting to go exponential, so be careful. As I was talking about, yesterday, day before yesterday, we push it through the third standard deviation, which we are. This is the point where things get crazy. We can get large outsized pullbacks when we're above the third standard deviation. That's the first standard deviation right here, second standard deviation right here, and this is the third standard deviation line right here. This becomes a less than 1% move away from standard, and that usually pulls us back in, or at least last time we did this took us 4 months of sideways to regain the energy to go higher again. Now can we could pull it way out there. We go 4 standard deviations. That's a very rare event, but we could do that. Be like 99.99%. Just for, you see right over here, pushed it out, tried to pull away, and we went into 4 months of consolidation. So this is a warning sign that gold might be about to take a breather, especially if we get one of these big and then end up closing red. Bitcoin just sitting here. This is not my favorite place to sit on the roadmap line. Just hanging out. And we got up to that third standard deviation. Didn't poke through it, but came right back down. Hadn't really had super exciting moves. You can see right over here, we did get outside on Bitcoin. You know, Bitcoin and gold, not the same. So don't use, we pushed way out, sat till we got back to then we got more energy, and that was it. Then we had to take a rest. And we haven't really had a big exciting move on Bitcoin since then. That was late last year. And while we've gone to new all-time highs, we haven't really had a big exciting move to finish off Bitcoin. There's potential, but that right there is a warning sign that we may have hit a top. Ethereum. Needs to break out of this downtrend highs. So this still working on, that looks like, right now, this looks like an A. This looks like a 1, 2, 3, 4, 5. Working on some sort of B. Then we'll probably get a C. Absolutely beautiful correction. And then we could potentially go higher and break through the downtrend highs. We'll see. So this may be indicating we're about to see another crypto flush. That could correspond with the warning signs I'm seeing in S&P and NASDAQ futures. Russell kind of doing its own thing. NKD, that's how you read the tea leaves in the market. Know what's coming. NKD, that's chugging higher. That looks like getting 5 up. Need to push it on up a little bit, and this next retrace needs to not overlap that. And we need to go on higher. That can take Bitcoin and crypto higher, but we may experience a pullback, a sudden pullback, before we can get the momentum to go higher again. Dollar, let's jump back up to the daily charts. Well, rejected off the roadmap line. As briefed, this was an A, B, C. The trend was down. That's a correction. Trend resumes. If and when we break below this, it kind of confirms that we're going on down, more than likely. Going to make a lower low than that low right there. Something down here. This is what that looks like so far. Apple. That was a big A, B, which is down there. C potential. Trend was down. Correction was up, even though it was deep. Lower high. Watch out for support right here. If it doesn't hold, going on down. I'm not playing Apple because that's not a very clear pattern to me. Corrections are not a fun place to play in necessarily, because there's too much variation and too much uncertainty, and it can last way the frick longer than seems reasonable. Like this A wave really fast, and then this B wave pretty fast, and then this C wave lasted for May, June, July, August, September, October to get up to here. And if that's an A wave and that was the B wave, that makes a lot of sense. And this could be a C wave that maybe goes longer than this one, or maybe goes fast. I don't know. And until it tells me otherwise, I'm just going to take it easy on this. Now, what we could see is it pop down here. We get a 618 retrace, and then we do something fast. That would be the setup to watch for. Amazon. We're grinding here. This can take another trip down, back down to the lows, despite what some people think. I've seen a lot of bullish analysis like Amazon's lagging. They're lagging because this looks like it's corrective and it might need a flush down to the lowest low. Lower than what we had back here in Liberation Day. Google had a choppy start, but broke out. Still looking for that to rally up to 265 area right up there. It looks like we might just go tag it. Meta, so far holding on to the roadmap line. That's what we want to see if we're going to go higher. It glanced off of the 1448 a couple times, retraced to the roadmap line. This sets up a smaller roadmap bounce. That high, that low. Here's your upside targets when we get above the 755 area, 812, 827, and 839. So that's the conservative target, 812. A little more aggressive, 827. A little more aggressive, 839, 840. And with that retest, if we're going to break on higher, I would expect it to come all the way up there. If we don't, if it starts failing here at that 850, 755 area, get back below that roadmap line, that's where this could come into play down here. Microsoft. Only 55% want one of those reactors, huh? Hey, thanks, Gina, for becoming a channel member. Me and my family do appreciate that. YouTube content here is done by me and my family. Microsoft, we've got this. We completed an ABC correction back here in Liberation Day. We didn't do that the rest of big tech. This is the only one. Well, NVIDIA maybe. I guess it depends on how you count it. This was one big rip higher into that high right there on the last earnings. Now we started into this correction where we kind of had an A wave down, a B wave retrace that held the 618, and now we're looking at potential for the C. And if we get through that breakout, which is the all, that was the high we broke out from all the way back here, July 2024. Now most big tech made a high in November or December. Microsoft made its high back in July. We broke out through it in June. So it took 11 months to get through that correction. Came up just shy of the 1618 right there, 565. And then we started this correction, which that looks very much like an A, very much like a B. And this has very much potential to be a C right down in here. But if we get a little extra gusto to the downside, we could be down here. So this is a warning. I could lose 20% right there off Microsoft. NVIDIA. Now, I say kind of the same, but kind of not to Microsoft because we had a pullback back here in July. We rallied up. We made a higher high, which could be valid for a B wave. This could be an A wave. This could be a B wave. We got a little too excited. Then we did have a C wave that did make a lower low, so this could be an ABC complete. Now we have a big rally, but we only got to the 1272. We haven't quite gotten close to that 1618 like we did on Microsoft. Now this was struggling a lot right here, and it may need to come down and retest that kind of breakout level. And that breakout level comes all the way back down here, though, because of this original high. This could come back down 50 points on NVIDIA, whether you believe it or not. Tesla, looks like that was the correction complete. No real subwaves to it. we've got this potential wind up right here. And if we break out and go higher, it puts us right up in here. And there's people buying calls like crazy all the way for a move up here to extreme levels. 850 to 900. I don't know if that's going to play out, but we did this kind of watermelon seed squeeze thing. When we broke out of it, we came right to... It's funny how this works. The width of this thing starting out, the mouth of this thing, right here, this first initial move, projected right off the breakout. And that's where we found resistance. And we haven't been able to get through. Now, maybe we're just consolidating right under here for the next leg. And we could double that again. Which would put us up at 640. 600, 640. So that'll be interesting. Now, for one, well, where's an example of this working like that before? Right here. Costco. See that right there? Consolidated. And we tried to go for it again. Yeah, maybe we went off of that. Yeah, I guess we did go off the low right there. Consolidation. Right there. You want to see this stuff's not magic. I mean, it seems like magic when I point it out, but there you go. So going back to Tesla, we could, I guess, pull that back down here. That could put us up to 570, 585. Guess what? Got a fib line target, 550. Got one at 600 for this pullback from this high to that low we made on Liberation Day. That expansion right there and right there. Love it when a plan comes together. So this will be interesting. Netflix, looks like we're doing a 618 retrace of the bounce. We bounced off the roadmap line. Tagged it right here. Started October. Kind of topped out. Drifting back down. Looking for this 618 to hold right around 1170. 1170. Just call it even. 1170. Looking for that to hold. Turn back higher. Get through the next little baby 618, which will be from this high down to that 618, which is right at these highs right there. Bounce up, get through that, sets the stage for coming on higher. Retesting this. When we get through these highs right here, we set the stage to go higher again. Right up there, around 1380. Simple as that. All right, I go pull all the gainers, things moving up in the pre-market. I go pull all the decliners, things moving down in the pre-market, and I bring some setups. So let's just dive into the setups, shall we? Dive in. I've been blabbing about a lot of stuff here lately. Hopefully you find this helpful, beneficial. Let's still pull. we go. Do you actually find value in the deep dives into the price action and how I kind of break it down why I think whatever's going to happen next, like on Netflix or other tickers along the way? Do you find value in that? Let me know. BHE 27, that's pretty good. 74, standard. Negative, I wouldn't trade it. But doesn't negate this from working out. 42 would be the upside target. COHU. Here's the high, here's the low. 42 trades. Never heard of this thing before in my life. I mean, I have looked at this before, but because I built the thing that searches for it, but I have no idea what this stock does. No idea. It looks like electronic semiconductor thing. 42 trades. That's bing greater than 80. That's bing greater than 2. That's bing. I would trade this. The target 24. Right there. DFAR. So this did a bounce back here. This algorithm is already in the trade from back, way back over here. Waiting for an upside continuation. Potential trend. Pullback. But the continuation has not manifested so far. We did another pullback here, back here in August, and we're now doing another pullback here in October, kicking off another entry right up there, 24, 28, and it has no history of working. So 30, for those of you who don't know, you've never delved in statistics, a statistical population is 30. Anything less than that, these numbers don't mean jack diddly squat. Like, you can run, oh, this has happened 4 times in the past. Great. 4 is not a statistical population. It's got to have happened 30 times in the past for it to really have statistical meaning. Otherwise, it's just kind of like the Bitcoin halving event. Yeah, 4 times in the past, we've had a crypto winter. Well, I'm not really going to count against a crypto winter until we show that that's not going to happen. But at the same time, it's not necessarily a statistical given that it's always going to happen. You can flip a coin 4 times and get heads. You can flip a coin 4 times and get tails. All right. Now, flipping a coin 30 times and getting heads every time. Now something's kind of weird with that particular coin and those conditions to flip the coin. You're starting to have a statistical population. But even a statistical population can lie to you, so be careful. GNRC. This one's still working on that breakout from back here. But we did get a new, smaller 211, just below 214. For Generac, ICF. So that was the bounce from back here in August, and we're seeing this bounce again. And actually grab the smaller one. 62 would be the target. Not keen on the statistics, but that may work out, then may work out, may work out, and may get all of these to work out from all the way back here in May. Then you may be like, ooh, that's taking a really long time. So the average time this takes is 45 candles. And the standard deviation is 35. And if you want to get to the 99%, you've got to have 3 standard deviations added to it, which gets you to 150 candles, which gets you to about 210 calendar days, which is about 7 months. So you look back here, and this fired off in May. June, July, August, September, October, November, December. It might be December before this plays out. And then that's just to the 99 percentile. That still leaves 1% of these that can last longer than 7 months. So keep it in mind when you're trying to buy options or whatever. Now, when this one works out, all these sub ones are going to work out too. So OFIX. Here's the high, here's the low. There's the entry. 16 is the target. 30, 76, 1.2. That's just a standard. This one's just kind of like one of the normal OG standard statistics. I guess 1590 would be the target right there. That one might work out. RWR. Here's the high, here's the low. Dow Jones Real Estate Investment Trust ETF. Interesting. I didn't even know this existed. Dividend yield 4%. Potential upside. 23 trades. 873. Just in line with average. 1.4. A little better than average. SCHH. There's like tickers for everything. This one's in it from back here. Just like so many of these other ones. They all seem to be somewhat related since they're in real estate. And this one, upside potential, 22. Schwab's Real Estate Investment Trust. This one has I would play most of these in shares. Has a dividend 3. A little worse than RAR. Slab. Silicon Laboratories. This one fired off back here with a 159 target. Did a smaller bounce in here with a smaller target at 147. Statistics just not really like getting me excited about it. Here's another one. That one worked out pretty quick last time. Got this bounce, kicking off the entry, target at 59.90. Another real estate investment trust. This one's by BlackRock. Pays a 2.6, even a little smaller dividend. Has less awesome statistics. Might work, might not work. Last time it worked. Victor. There's the high, here's the low, there's the entry. 74.64. Doesn't have any history. Only 6 trades, not statistically significant. So you have to fall back on the. So what you do? You fall back on the historic. My history. Like you scribble these out. The history is 74% of the time, 74.8% of the time. This is over tens of thousands of trades, and the profit factor of 1.24. That's what you could expect. These statistics are ticker agnostic. The reason for looking at the particular statistics of any one ticker is to see if it tends to trend. That's what it tells you that when these have a greater than 30 and these are good numbers, it tells you it tends to do trends, pullbacks, and continuations to the target in a consistent manner over the history of the ticker. So not all things do that. Some things are absolute chaos and have a bad win streak. But this one's just kind of gone sideways after kicking off the entry. We had a little volatile spell back here, kicked off the entry, and just keeps generating new entries, but not closing anything out. There's that one, and 42.92 on that one. 10 trades, 71.4. It's kind of an average ticker. It's the only one in there really kind of sparked my peanut butter. Was the one, what was it? Bofix? Trying to remember which one it was. That one. COHU. That's the only one that really sparked my peanut butter. Got me kind of like, ooh, that might be interesting. Right there. Yeah. COHU. Now, bias for the day. Getting big moves. Okay. Here's the warning, right? Typically, I get about 60 to 80 tickers on my gainers and decliners list total. The last 1, 2, 3, 4 days, I've had nearly 200. And the market hasn't really moved since Friday. Inside candle, inside candle, inside candle, inside candle so far. Elevated volatility, pre-market volatility, but the market's not really going anywhere. That's a warning sign for me that something's up. All right, there's instability in the market. That can lead to a second flush. Just looking at the high time frame here. We're hanging at that 618. Here was the high. There was the low. We're hanging right here. This can take another oopsie very quickly down. I'm starting to feel like we should be careful. From here, could be another 4% very easily. And if things get a little spicy, 6% back to the roadmap line. Six and a half percent. So be careful out there. I'll be on Market Masters with Jack here in about an hour. 11:30. ProsperityPub.com/marketmasters. I'll throw the links. Where did my links go? That's cool. There we go. Throw the link into the chat. Right there. In the poll. Seems like everybody enjoyed the deep dives into price action. Well, thanks everybody for coming. I'll be back same bat time, same bat channel tomorrow morning. We'll hunt for opportunity once again. Have a great day. We'll see you tomorrow.